Two sectors that are getting hammered in Bursa Malaysia would be number one, gloves, and number two, tech. So we can give our thoughts on whether this will continue or maybe it's a buying opportunity. Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. So let's start with gloves, the big four, right? Down big. The one that is down the most is Hata Lega, which is a shame because they used to be the lowest volatility second lowest after Kosan, but interesting that year-to-date returns, the two that were low volatility are now the highest volatility.
Yeah, probably also is because many institutions are invested into them.
There you go.
Because they are good quality, and when management say something bad, obviously they will panic and the sell off.
So what is the cost?
Before we go to the cost, you can see that the financial actually looks fine. I mean, nothing much of a spook. They are still making profit. Same for Corsan also. Corsan actually has been even steadier. On surface, it looks pretty good. And also you can see that their prospect also, they say that nothing much of a negative news. They say that there's an improving demand. The high US tariff will kind of like help them to capture some market share back from Chinese players. And also they did mention that they're going to be potentially going on the expansion mode beyond the pre-pandemic demand level. So all of this sounds like pretty much of a positive outlook. But if you look at the Corsan obviously they are known to be quite conservative. I mean, the management. So they can see that they say the global demand for glove is going to be still challenging for 2025. But with the tariff, the Malaysia is well positioned to benefit from this shift. Right. So obviously sounds like also pretty much of a good thing. So you only know the reason why the share price fell off if you attended this briefing, which is not publicly available, unfortunately. So we got fortunately our research team are inside there.
And our Fire Pro members managed to get this info as well.
Get as very fast already. So what's happening is that they have basically Hata Lega say there will be a lower utilization rate next quarter. So this quarter is around 86%. A lot of people expected them to actually maintain an 86 to 90% utilization rate because of the tariff, right? So people think that, because you are getting more business with the US, utilization rate should be remain at a high level. But they say that no, we are going to go lower than it was this quarter. So they're going to be going around 70 to 75%. And the reason why is because the US buyer front-loaded a lot. They bought a lot of these Chinese glove makers before the tariff actually got implemented. So that's why they stockpile a lot. There's a lot of inventory, and it's going to take a while for the inventory to deplete. Some of the analysts projected that maybe around May, June, that's where the inventory will start to clear off. But that is according to the analyst projection. We still don't know whether would it persist or not for the next few quarters. So that's the uncertainty that we have. And the third one is basically the non-US market. So the Chinese also, obviously, they are quite smart. Instead of selling it to the US, they kind of like shifting a little bit, and they are focusing more on the non-US market. So that's the challenge of the Malaysian market also, because we also do sell to non-US market, and there has been an average selling price pressure because the Chinese, I think they sell around like 15 to 16 USD per 1,000 pieces, whereas Malaysian, we are selling around 20 to 21. So I think the non-US market share, that's where they're going to be losing out a lot for the big four players. And last but not least is, this side we still don't know yet. It's more of the analyst projection. They say that potentially next quarter, Hata Lega will be making losses.
Okay.
So I think that itself already, it's enough to create a lot of panic in the market. So this one is the age, basically one of the statistics that they compile between the demand and supply for the glove. You can see that they still think by 2027, the global supply is still going to exceed the demand for the glove. So what this means is that potentially maybe the average selling prices cannot go up already. It's going to be maintaining at a certain level. And this is actually the demand side. You can see that they think that it's around like 4 to 500 billion pieces, right? So Corsan has been very conservative. They say that they think the demand is going to be around like 300 only.
Okay.
Yeah, which is far lesser than the supply lah. So if the conservative player thinks like that, potentially maybe it is going to be persisting for the oversupply situation. Now, this is the stats that I've compiled, which is the net cash between Corsan and Hata Lega. So you can see that every single quarter they actually burn 30 to 40%.
Yeah.
Yeah. So right now, initially they hold a lot of cash, about billions, like 2 billion. Right now, 3 billion at one point.
Sub
now,
one.
Now it's like 800 million.
That's tough.
Yeah. So we don't know whether they will continue to burn and whether Hartalega can continue to be a net cash company or not because
Right,
of this
the good
situation.
thing in a way is that they don't have a lot of debt.
Yeah.
So they
the
have that
smart
option
yeah,
to.
yeah, the smart thing is they clear off all their debts. Whereas for Corsan, you can see that they are still pretty much very strong as compared to compared. So that goes
But
to
it's
show.
a general decline for both of them, right?
Yeah, correct. It's a general, and also for Top Glove, I think it's a net debt already because they took Sukuk.
The perpetual
perpetual
Sukuk,
Sukuk.
right?
Supermax is still about 1 billion. That one is still fine also. So now that begs the question whether this special dividend payout by Hartalega is it a good move or not? Which they pay out 10.85 cents. As compared to like the previous quarterlies, they announced actually very little only. Well, on one hand, it is a good move because it rewards those long-time shareholders that have been holding their company. But the flip side is that you most likely they are using their cash pile to actually pay these dividends out. So that's also another thing is whether, I mean, on one hand, you want to like satisfy the minority shareholder. On the other hand, you also need to survive, right? For your business. So it's actually two sides of the coin, whether you think this is a good or bad move. But either how, the money is already spent. Hopefully they'll tone down a little bit on this dividend spending and maybe spare some cash for potential cash burn because of this poor utilization rate. So yeah, that is basically the glove sector struggling. Another one that
also,
is struggling.
You got the
is tech.
OSAT guys, right? MPI, Inari, Gtronic, and Unisem.
Yep.
Globetronic is just sad because without the industry decline, they've already been declining quite a lot. So now they decline even further.
Yeah.
Yeah, it just goes to show that just because a big drop happened doesn't mean another big drop cannot happen, right?
Yeah. And MBI also, I think right now it is down
tough.
20%. It finally break the 20 ringgit support level, a lot of people say. So right now I think it's about 18 ringgit per share. Another tumble. Inari also, today's price also is down
so
quite a
why?
bit. Yeah. Okay, so similarly to Glove also,
numbers look okay.
It looks fine. It looks like it's recovering back already for MPI and also for Inari. I can see that there's a huge jump. But if you attended MPI's briefing, they basically say that the outlook is very bad. And also Inari's briefing, I think we just recently got this information also. They basically say that for Inari's case, the net margin of 20% is they no longer can make that kind of margin already. It's going to be back to 15%. That's what they guided. So if you look at when they made 15% net margin, it was actually before 2019's boom. So 2019 was during the trade war where they get a lot of contract from the US side, especially from Broadcom. But if you look at 2014 to 2018 time, I think they are still trying to like regain their footing. They are trying to like find their way of their customer. And back then also, if you track their share price, it's actually around like 1 ringgit and 70 cents to 2 ringgit and 20 cents, which is at current price point. So they basically say they are still struggling. Businesses are still not picking up, even though we thought that 2025 is going to be the year of where they start to recover. But it still doesn't show signs of a recovery. And another information we have is actually MPI. So they say that the Chinese OSATs are actually ramping up in Malaysia to serve the US and the EU. So what this means is basically they are kind of like stealing some of our businesses from our local tech guys. Yeah. Tough times also for the Malaysia, especially those that don't spend a lot of R&D. I think those they will become more complacent and most likely will be replaced out if they are not being careful. And yeah, basically also another information is that the customer of MPI, they are asking for 40% discount on one of the recent tech that they serve.
So another interesting fact is that for a lot of the OSATs, I won't name which one, but we also attended this. I also attended this briefing, or I knew someone who attended the briefing, and what the information I got was they are at more or less at peak or even above previous peak utilization. Okay, and they are already going to be struggling. So the numbers haven't appeared yet, but imagine, let's say above 80% utilization, which is pretty much, you can't get 100%, right, in manufacturing.
Yep.
I mean, you can, but it's not smart. So and then you get 40% discount. So your real 80%, let's say peak utilization 80% with a 40% discount means it's like before COVID around 50%. So the real utilization rate is like 50.
Okay.
So that's what I mean. Like they're actually max at close to max capacity. They're already gonna lose a lot of money, and then again 40% discount.
Yeah.
So that's
So
tough.
that's a double whammy, double
Yeah.
tough. Yeah. So this one also is basically the analysts they slash their guidance, at least for the earnings forecast. So they say that sales volume is still going to be remaining low, and so they think that you should discount Inari's profit by 25%. So that's why it kind of tumbled a lot. And also another reason is because of this US the tariff for 25% on semiconductor. And if you guys didn't know, Malaysia, about 60% of our total trade is done with the US.
Yep.
And a lot of it is actually with the E&E export. So we still don't know whether these 25% will be imposed on us. But it wouldn't make sense also because a lot of these US MNCs set up their base over here.
Yeah.
So they're kind of like buying expensive raw material, assuming like let's say they need to pay for the tariff, right? So yeah, we shall see whether the Trump will actually kind of like give some sort of exemption to the tech guys. So at least this is some sort like a small little positive for the tech industry. So the final thoughts is that yes, I think this has been on talks already. If you read the Edge News also, it also covered that China has been like snatching some of the tech guys' business away, and they are throwing a lot of like low prices. So which is why the Malaysian are kind of like struggling a lot. It's similar like a steel situation, where the guys they cannot sell at a higher price. They are forced to sell at a low price because if the alternative is really so low. So that's why they have to lowball a little bit. And the second point over here, which is Trump on Malaysia's E&E export. So this one, I think the impact may not be so dire. I don't think he's crazy enough to actually impose a 25% on our semiconductor because they are going to eventually buy back from us.
And we're low priority also.
Yes, because we are on the back value chain, not really the front end one. So yeah, most likely I think this one maybe has some sort of exemption. The third one, whether this is an irrational sell-off for both glove and the tech guys, right? I don't think this is an irrational sell-off, actually, to be honest, for these two sectors, because this is a known fact already that the both also actually involved with Chinese also taking businesses. And Malaysia's glove has known to be facing a lot of oversupply situation because of China also. And yeah, the reason why they went up for the past few weeks also, it doesn't really make sense, other than just the analysts think that because of this tariff, it will help Malaysia. But it will help Malaysia, but not so soon. It's still going to take some time, like maybe a few months or maybe even 1 year to see some of like a positive in terms of earnings. So I don't think that this sell-off for offset and also for the glove sector are irrational for the time being. But we shall see whether there's any new kind of like, I don't know, insights where they say that they managed to find a new customer that are willing to pay them higher. I mean, we still don't know yet. Right now, it is still pretty much bad. But what do you think about these two sectors?
I agree with you. It's not irrational. In fact, all of our FirePro members got this information months ago in 2024, where we knew tech sector, especially OSAT, and to a lesser extent ATE, are going to struggle because of China. And when it comes to gloves, I think the situation is a little bit different. It's not as aggressive because, Inco itself is just that, right? There's no new players coming in, so to speak. But we did tell our members that it's not going to be what it used to be. And the reason we shared this with our members is because there were a few of them asking, hey, is this an opportunity? Because gloves, since the peak is down like 90 over percent, right? How much more can it go, right? How much lower can it go? And what we are saying is, look, don't talk about the pandemic peak, right? The pre-pandemic peak, I think for it to go back there is itself going to be a challenge because you're a new player in China. This is the same with Petronas Chemical as well. So this is the common thread. China is in a mode of doing everything themselves, mainly because of trade. Of course, the US wanting to increase tariffs and things like that. So they are doing what they're doing. We can't really stop them. And as for Malaysia, we just have to suck it up, right? There's nothing else we can do.
Yep, exactly. But if you want to know what companies to actually buy, we actually cover that in our Fire Pro. And this is actually our prediction. So if you guys didn't know, we did a webinar. And this is like an 8 time per year webinar.
So
with
I
our
think
Fire
this
Pro.
month we'll have one, or next month, right?
Next month. Yeah.
Yep.
So basically, on January, we did talk about whether tech and glove recovery will be on site. Our conclusion basically back then we say that it's not going to be on site. So yeah, that's the spoiler. But if you want to join this 8 times meeting, make sure to check out Fire Pro. And also, if you want to know what companies that we are looking at this bloody market, right? What stocks we are looking to buy or potentially sell, you can see the names inside over here, inside our Fire Pro Malaysia portfolio. So far, the returns are still positive, pretty good. Fire Pro Global, this one is the best performing so far out of these 3 portfolios because majority of it are related to Chinese or China related stocks. So if you want to know what companies are there, make sure to check out inside there. And if you are more of a dividend guy, you can see our boring portfolio. We also disclose like what companies we invested, what is their dividend yield for each one. The highest one so far is about 14.4%. So if you want to know what are the names behind it, make sure to join Fire Pro. You can use the 10% coupon. The links will be in the description and comments. And if you want to see some of our sample on how we do our write-ups, or maybe even the management notes, how do you even take search information and how we share it with our members is also inside this free sample for you. So if you want to check out all of this good stuff, it will be in the description and comments. So yeah, that's about it for today's video. See you guys next week.